Folks, we can't cover earnings without talking about Etsy earnings, okay? It's important stuff. Etsy reported earnings in the after hours, so we're a little bit late to the party, but that's okay. Stock was down 2% as a result of those earnings. Was down a little bit further if you look. Actually down right around 5% at one point. So it recovered a decent bit. Recovered about half of that, so pretty nice to see on that aspect. Nothing too crazy. Look at the performance of the stock over the last 6 months. Pretty great performance. I mean, 27% up. And obviously, it goes without saying the last year has been incredible for the stock. 75% in the last year. And if you look really since 2020, since a very minor dip that they took in March, like everything did, they've been up 600% in quite a short span of time. My apologies. So it's going to take a lot for the stock to really continue the momentum that it's been under. So momentum's been crazy for it. Let's look at these earnings. GAAP EPS of 62 cents beats by 7 cents. Really nice to see how they've been able to grow that line significantly since they really took off last year. So very nice to see in that aspect. Revenue line coming in at $532 million, which is actually an increase year over year. Pretty significant for them to see an increase. Obviously, very tough comparables based off the massive growth they showed last year of really 200+% nearly every quarter. 17.9% growth, nice, and a beat by $13 million. So good to see. Gross merchandise sales here, 17.1% growth. Marketplace sales increased 12.4% to $2.7 billion. It's great stuff. I mean, it's great stuff. As far as guidance is concerned, look at this. They're expecting to come in at $660 million compared to $690 million, which is a 10% growth. But the consensus was $693 million. Obviously, the consensus a lot higher than their guidance, and then that's kind of the issue here. That's why this stock fell, and I'm surprised it's not actually down a little bit further just based off the recent history of the stock. Missing guidance in this market is absolutely a death sentence. You're talking about making stocks like Apple go down 5% when they miss their guidance. I mean, good grief. So keep that in consideration. Let's look a little bit more in detail. Look at the press release on this company. See if we can find some great details. Look at this tiny font. Etsy thinks I'm not blind, but I am. I am blind. So that's great stuff. Interesting stuff. Well, that's obviously something worth mentioning right here. Excluding face masks, the marketplace grew 23.7% year over year. Again, I told you face masks were accounting for a massive portion of their revenue, and you can see that obviously a 12.4% increase when you include the face masks, and when you're not including them, gross merchandise volume grew 23%. So quite a massive increase when you're talking about getting, excluding the face masks because they were such a massive portion of their business last year. Not too crazy though, but Etsy Marketplace acquired 11.1 million new and reactivated buyers who haven't purchased in a year or more, so obviously massive. You want to see more people buying. Habitual buyers who have bought more, 6 more purchase days and $200 more in the trailing 12 months grew 65%. So more people are actually staying loyal to the platform, and I get why. There's a lot of cool stuff on Etsy. So as long as they do their job properly, they can keep this business growing pretty easy, actually, just by word of mouth. Looking at the charts, we love looking at the charts. You see here the 17.9% growth in the 9 months comparison, up 39.2%. is pretty darn significant, so it's pretty nice to see in that aspect. You love to see it. I mean, you love to see it. The net income line actually declined 2% year over year, but on a 9-month standpoint is up 65%. So this quarter saw a little of a decrease here year over year. But again, compared to the 2019 numbers, these are ridiculous numbers in terms of that. This used to be a negative earner. So it's really good to see in that aspect. Obviously, you see active sellers up 102%, active buyers up 37.8% as well. Obviously, the buyer category is massive, but the seller one I don't think people necessarily consider as much. The more sellers you have on the platform, the more products and the more diverse products that are available to potential buyers. That's how you grow the buyers, is by having more sellers. Just kind of how that works. You have to have really a wide array of merchandise. Otherwise, good luck selling stuff. So, nothing's exciting here. I mean, these are just basic operating highlights. Nothing stands out. As far as that's concerned, they're just selling you the business. They're just trying to sell you the business. We obviously saw the guidance and outlook. Would like to see a little bit better, obviously, as we might have expected, but that's okay. That's okay. I still think the fact that this business is continuing to show positive comps year over year, it's a good sign for them. It really is. And again, spending is still up, regardless. I don't know where people are getting the money. Obviously, it's got to be the government because they're not working. So I don't know how people are getting all this money to spend on crap. It's kind of crazy. Let's look at the balance sheet here real quick. If you look, it's a 9 months comparison. Total current assets actually declined in the last 9 months. $1 billion compared to 1.8. Pretty much halved the cash equivalents position. So short-term investments also sank. I would hope that they paid off some long-term debt, or they converted it into longer-term assets, which I think they did here. This goodwill number increased quite a bit. Curious what that might be. But $3.5 billion compared to $2.4. So overall assets did grow, so that's a positive. Liabilities also saw some growth too. $471 compared to $454. Now, total liabilities, you don't like to see it. This company has doubled their long-term debt in the last 9 months. $2.9 billion compared to $1.6 and total liabilities. It's not something you like to see. Shareholder equity fell $533 to $742. This is not a great balance sheet. I don't like this balance sheet because we're talking about there's a little bit too much long-term debt that they added in the last year. It kind of, I get it. It's part of growing the business, and I know why they're doing it. I just don't like that much long-term debt in comparison to assets. So, again, they could pay it off with the assets they have, which is nice. But based off that trajectory, it looks like they want to continue adding to it. So keep that in mind. But again, growing companies are that way. They really are. Let's look at the valuation of the stock and keep it in mind how much this thing's grown over the last little bit. It's trading in a market cap of $30.33 billion is relatively expensive when you add it out. You would predict that off of even the guidance given, this is a company that's going to be putting just over $2 billion, right around $2.1 to $2.2 billion this year. And off of that number, they're trading at a $30 billion market cap, which is somewhat expensive, right around 15 times. It's relatively expensive for a company that is now slowing the growth rates. It's a multiple in this market that's traded more for the companies that really have extremely high growth rates, 40+%, 30+% in that range. So I don't think it quite deserves the valuation. And from a P ratio standpoint, not in a great spot either. So I'm not a buyer in Etsy at these levels. And again, it's right at all-time highs. I think it's just a little bit too valued for where it's at. I understand the core business and the growth factors that come here, but I think last year just kind of elevated the stock price a bit too much, a bit too big for its own britches. I hope you had a good one. I'll see you later, folks.